Welcome to The Explainer. Today, we are tackling a really big question. In a world that feels more and more volatile, how do you actually protect the money you've worked so hard for? Well, we're going to dive into a powerful strategy for this, and it's called dollarization. Let's get into it. So let's just start with a number that really hits home, -30%. That's how much the Brazilian real lost against the US dollar in just 1 year, back in 2020. Just imagine watching almost a third of your savings buying power just, poof, disappear. This isn't just some random statistic. It's a very real threat to your financial stability. And that really brings us to the core question of this whole explainer. When the economy can swing so wildly, how do you build a defense for your savings? How can you make sure that the value you're creating today is still going to be there for you tomorrow? Okay, so the first step is to really understand what you're up against. Things like local currency, instability, and inflation are these constant pressures. The real, just like a lot of other currencies, has a history of volatility. And what that means for you is that your savings and your investments can lose value just by sitting still. But, and this is the good news, there is a powerful strategy to fight back. We're talking about dollarization. Now, I know it might sound like some complex financial jargon, but the idea behind it is actually super simple. Think of it as creating a financial shield for your wealth. So what is dollarization exactly? Well, to put it simply, it's the strategy of moving a part of your wealth into US dollars, or into assets that are tied to the dollar's value. It's kind of like diversifying your money's nationality, linking a piece of it to the world's main reserve currency. So why would you do this? Well, there are three huge benefits. First, it directly protects you when the real loses value. That's the big one. Second, you get global diversification, which means your wealth isn't completely tied to the fate of just one single economy. And third, it's a powerful hedge against local inflation, helping your money keep its buying power over the long haul. Okay, so the concept is clear, right? But how do you, actually do it? This next section is your practical guide. It's your toolkit. We're going to walk through 4 really accessible tools you can start using to dollarize your capital, like today. All right, tool number 1 in our kit is probably the most straightforward one: exchange funds, or fundos cambiais. These are basically investment funds that just track the movement of the dollar. And the real beauty here is their simplicity. You can invest in them directly through popular Brazilian brokerage platforms. Super easy to get started. Let's make this real with a quick story. So meet Maria. She put 20,000 reais into an exchange fund. Then the dollar went up by 10% that year, and her investment grew right along with it, turning into 22,000 reais. See? She didn't have to buy a single physical dollar bill. She just invested in its movement. Now for our second tool, which takes things a step further: BDRs, or Brazilian Depository Receipts. This is basically your ticket to investing in shares of global giants like Apple or Google or Amazon, but you get to do it directly on the Brazilian Stock Exchange. So your investment is naturally tied to both the company's success and the dollar's value. So how do you choose between these two? Well, it really just boils down to the kind of exposure you want. Exchange funds are a pretty direct bet on the dollar's movement, so we'll call that a moderate risk. BDRs, on the other hand, are a bet on both the company and the dollar. That means there's a higher potential for returns, but yeah, there's also higher risk. It's all about knowing what game you want to play. Tool number 3 is for all you fans of diversification out there: international ETFs. An ETF, or an exchange-traded fund, is kind of like a basket that holds stocks from a whole bunch of different companies. With an international ETF, like one that tracks the S&P 500, you're buying a tiny piece of 500 of the biggest US companies all in one single transaction. Boom! Instant global diversification. And the results? They can be really powerful. In 2024, for example, an investment in IVVB11, that's a popular S&P 500 ETF in Brazil, returned 12% in reals. This shows that double benefit in action. You gained from the growth of the US market and from the dollar getting stronger against the real. Okay, and finally, our fourth tool comes from the world of digital assets: stablecoins. Now, these are cryptocurrencies like USDT or USDC that are pegged 1-to-1 with the US dollar. They're literally designed to hold their value, and they offer a really modern, liquid way to hold dollar-equivalent assets digitally. Let's look at João's story. In 2023, he converted 10,000 reais into a stablecoin. Now, while the real was going up and down, the value of his capital when you measure it in dollars stayed right where it was.
He effectively just parked his money in a digital dollar, protecting it from all those local currency swings. All right, we've seen the what and the why. So now it's time for the most important part, the how. This section is your blueprint. It's a clear, actionable plan to help you get started without feeling totally overwhelmed. We can break this all down into 5 really manageable steps. And it all starts with you. First, assess your own investor profile. Are you conservative or are you more aggressive? From there, you can pick the right platform, learn to keep an eye on the exchange rate for good times to buy, understand the tax rules, and finally, make this whole strategy part of your long-term financial plan. Now, a question I hear all the time is, how much of my portfolio should I actually dollarize? And while that's a super personal decision, here are some helpful guidelines to think about. If you're a conservative investor, you might aim for somewhere around 10 to 20%. For moderate profile, 20 to 40% is a pretty common range. And if you're a bit more aggressive, you could even consider allocating 40 to 60% to dollar-linked assets. And where do you actually go to do all this? Here are a few great places to get started. Platforms like XP Investments are awesome for their ease of use with funds and BDRs. Clear is well known for having low fees on things like ETFs. And if you want to invest directly in the US market, Avenue is a platform that specializes in exactly that. Okay, before we wrap this up, it is absolutely crucial that we talk about the other side of the coin. Dollarization is a powerful strategy, for sure, but it is not risk-free. So let's just make sure we have a really balanced understanding of what's involved. So it's really important to be aware of 4 key risks. First, remember that currency volatility works both ways. The dollar can fall against the real. You also have to watch out for operational costs, fees that can eat into your profits. Make sure you understand the specific tax rules for international investments. And finally, just know that you're taking on global market risk. The US economy has downturns too. So how do you manage that volatility risk? Well, one of the best strategies is right here on the screen. It's called dollar cost averaging. Basically, instead of investing a huge lump sum all at once, you invest smaller, regular amounts over time. This seriously reduces the risk of buying everything when the dollar happens to be at a high point. It's a really smart move. To sum it all up, this quote from our source material really says it perfectly. Dollarizing isn't just about playing defense. Yes, it's an intelligent strategy to protect your wealth, absolutely. But it's also about playing offense. It's about exploring all the opportunities that the global market has to offer. And that leaves us with one final question to think about. We live in a deeply connected world, and that means your financial future is, by default, global. The real question is, are you prepared for it? Thanks for joining this explainer.